Okay, let's jump right into this explainer because we've got an incredibly fascinating paradox to unpack from this weekend's news. We are living in a moment of just profound contradiction. I mean, how exactly are financial markets hitting all-time highs while, frankly, the rest of the world seems to be boiling over with geopolitical and domestic tension? It's a massive disconnect. So today we're going to dig into exactly what's driving this and, more importantly, what it all means for us. To really wrap our heads around this paradox, we're going to break our analysis into four quick parts. First, the record highs amidst the tremors. Then, the upheaval in Washington. Next, we'll look at the global security flashpoints. And finally, Main Street's reality check. Let's start right at the top with part one, record highs amidst tremors. 50,580. The Dow just notched its first record since February, closing Friday at an all-time high of around 50,580 points. And honestly, it's not just the Dow. The S&P 500 just wrapped up a wild eighth consecutive week of gains. Right now, institutional investors are holding 50% more in stocks than their benchmarks. That's the highest figure we've seen since January 2022. Plus, corporate America is basically wrapping up a blockbuster earnings season, with profits jumping 28% in the first quarter alone. Wall Street is unequivocally going all in. But here is where things get really interesting. There's this stark, glaring contrast. Investors are piling into stocks despite a backdrop that, historically speaking, would absolutely trigger a massive sell-off. Think about it. We are currently in the middle of the largest energy shock in history. There's an ongoing war in the Middle East with Iran, and we've got persistent, massive jitters about AI disrupting the entire labor market. And yet, the market just keeps climbing? It really forces us to ask, is this genuine economic resilience, or are we looking at a bubble just waiting to pop when these real-world pressures finally crack the foundation? Which brings us perfectly to part two, upheaval in Washington. This friction we're talking about is playing out at the very highest levels of government. Just look at the dynamic when Kevin Warsh was sworn in as the new Federal Reserve Chairman. At the actual ceremony, President Trump was actively pressing the economic case for lower interest rates. But Warsh, he is stepping into an incredibly tough spot. You see, the conditions that would normally justify rate cuts, like falling inflation or a cooling job market, have kind of moved totally out of reach. The ongoing Iran war is keeping energy prices super high, and rising inflation strongly suggests rate cuts are basically off the table for now. So Warsh has to navigate this intense political pressure to lower rates, while the hard data screams that he should hold them steady or maybe even raise them. And beyond the Fed, the administration is juggling a massive multi-front domestic challenge right now. For starters, Tulsi Gabbard just abruptly resigned as Director of National Intelligence. Now, officially, she cited her husband's health, but sources are indicating she was largely sidelined from key national security operations over the last year. On top of that, the president's decision to endorse Ken Paxton over the incumbent Senator John Cornyn in Texas has sparked a ton of frustration within his own party. Add to all of this a proposed $1.776 billion anti-weaponization settlement fund, which is meant to pay individuals claiming political persecution, including January 6 rioters. And, well, you've got a perfect recipe for absolute legislative gridlock. And this internal friction is tangibly paralyzing Washington. Senator Ted Cruz literally described a recent closed-door briefing on that settlement fund as one of the roughest meetings he's seen in his entire time in the Senate. Lawmakers like Senator Tom Tillis are openly calling the administration's fund a payout pot for punks. Because of this revolt, an entirely separate $70 billion multi-year legislative package on immigration and border enforcement is completely stalled out. The political machinery is just grinding to a halt. All right, moving on to part three, global security flashpoints. While domestic politics boil over, the U.S. is also navigating this incredibly complex web of geopolitical challenges all over the map. Just 90 miles off the U.S. mainland, in Cuba, China and Russia have significantly expanded their electronic spy bases to monitor U.S. military sites, specifically targeting Central Command in Florida. Meanwhile, over in Europe, the U.S. is abruptly shuffling troops, deploying 5,000 to Poland. And in the Middle East, we're trying to mediate a fragile truce with Iran, even as we're uncovering major financial evasion tactics by the regime. It is a whole lot to manage all at once. Let's look closer at that shifting European defense landscape because it's happening in real time. To send those 5,000 troops to Poland, the U.S. actually abruptly canceled a 9-month troop rotation to Germany. This sudden pivot left NATO leaders like Secretary of State Marco Rubio and Secretary General Mark Rutte scrambling to grapple with a totally new combined force structure right on the fly. European allies are suddenly having to adjust to a highly transactional defense relationship, rushing to meet spending priorities while the US pivots its military focus dynamically. And meanwhile, as the military makes these rapid physical deployments, there is a full-blown economic war being fought in the shadows. Internal compliance reports recently revealed that an Iranian regime financier moved a staggering $850 million through the Binance cryptocurrency exchange. That was just one part of a massive secret payment network used to funnel billions to Iran's military over the last 2 years, completely dodging US sanctions. It really highlights just how incredibly complex and decentralized these global threats have become. Let's bring this all back home for part 4, Main Street's reality check. Because at the end of the day, everyday consumers are the ones paying the direct price for these global pressures. While Wall Street is popping champagne at 50,000 points, Main Street is seriously wincing at the checkout counter. Just look at the year-over-year inflation for basic Memorial Day cookout staples. Tomatoes, up almost 40%. Ground beef is up 14.5%, and hot dogs are up over 10%. Combine that grocery bill with gas hitting $4.55 a gallon nationally, largely driven by that Middle East conflict, and families are literally having to cancel holiday travel and downsize their backyard barbecues. And for the young Americans just entering this economy, like the class of 2026, this reality check hits even harder. They're stepping into one of the most nerve-wracking job markets we've seen in recent memory. Employers have sharply pulled back on hiring, and there's this heavy, pervasive worry hanging in the air that AI is already starting to automate the exact entry-level skills these graduates just spent years learning. But there's a really crucial nuance in this labor data that we need to point out. Yes, college grads are facing a tough 5.6% unemployment rate, but the situation is actually noticeably worse for those without a 4-year degree, sitting at 7.2%. Actually, it goes deeper than that. Economists are tracking a trend where less educated young people aren't just unemployed, they're increasingly dropping out of the labor force altogether. Because so many people have bachelor's degrees now, that traditional wage boost is slipping, and it's making the entry-level competition incredibly fierce for absolutely everyone. So as we step back and look at this entire incredible paradox, booming corporate wealth happening at the exact same time as soaring consumer inflation, geopolitical strain, and domestic political gridlock, we have to ask ourselves one fundamental question: how long can this delicate balance hold? Will the heavy weight of global flashpoints and those rising grocery bills eventually crack the stock market's golden run? Or are we entering some new era where Wall Street and Main Street just live in two totally different realities? It's the ultimate 2026 question, and one we are going to keep tracking closely. Thanks so much for joining me on this explainer. Keep questioning the data, and I'll catch you next time.